live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Yatin, markets affair with the color red is just not ending. I remember Valentine's Day came and went, but the love affair with the color red is just not ending because I don't know whether to call this a Black Friday, Red Friday, what
Absolutely.
Friday, I don't know, because we saw a 3% cut in the broader end of the markets, the mid and small cap indices. The crash continues. And week to date as well, the correction has been
True.
fairly steep in the broad end of the markets. Even on the headline level, Yatin, very close to that 22,100. We came very close to breaking below that level as well.
Yes, yes.
We'll touch base with our technical experts and figure out whether or not
Mm,
22,000 could be the floor
mm.
here, or are we, at risk of going below that as well. But all the sectors were in deep in the red today, led by IT and autos. IT, in fact, has slumped 8% for the week, Yatin.
Mm.
Nifty itself has hit a 9-month low, and from the highs, the mid and small cap indices, of course, have corrected over or in excess of 20% a piece. The breadth was extremely dismal. 1 is to
Mm.
10, 1 is to 11. It was that kind of a poor breadth in the market. And as I mentioned, all the sectors were trading in the red. Some of the laggards, then, of course, screen is a sea of red. Tech Mahindra, Wipro, IndusInd Bank, M&M, Bharti Airtel, Titan, all of these companies were deep in the red. 6%, 5%. These are the kind of cuts that we saw. But if you look at the gainers, few and far between, just four or five. HDFC Bank, Shriram Finance, Trent, by the way, managed to end the day in the green. Hindalco and Coal India. But Yatin, broad end of the markets, extremely
Brother,
bad.
another market's extremely bad.
Mhm.
Yesterday, the advance decline ratio was almost 1 is to 10, and today also it was no less. Almost, 1 is to 10 or thereabouts. The mid cap index was as low as 1600 points minus today. However, there was some recovery in the second half, but the index ended up almost 2.5-3% lower. So the pain in the mid cap end of the market continues, Nandita.
That's true. I think let's quickly bring on board then our guest for today to try to make sense of this fall, because there was no major news flow, but we did see a very deep correction coming in today. So let me bring on board Shrikant Chauhan of Kotak Security. Shrikant, great to have you on the show. First and foremost, how worried should one be, because the sentiment has literally crashed? I mean, you don't really see people asking what to buy; they are more keen to sell. But given the pace of the correction, is it time to turn constructive? Would you call 22,000 a floor, a bottom, or do you think too soon to call that and we are at risk of breaking below that as well?
Yeah, good evening, Nandita and Yatin. See, like for Nifty, one thing is like very clear that we are approaching to the extreme levels, and it is correcting to the fullest level of the corrective pattern. So we were like expecting 22,000, 21,800 sort of levels, all the technicians, but we were of the view that we may see some rebound very first, and then later on the market can again correct back to these levels. But this time, without rebounding from the levels of 22,500 or 600, it is like correcting relentlessly. And today we approach the levels of 22,100. So maybe uh, 200, 300 points more from here, but around this 21,800 or below 22,000 levels, between 22,000 and 21,800 levels, the market is having excellent support. Also, if we consider the performance of the market in terms of the 200-day simple moving average, then we are down nearly 10% now. We are 10% away from the 200-day simple moving average levels, which is around 24,200. And in the past also, if you see the overall reading of the market, then whenever the market is down near about 10 to 12% from the levels of 200 days simple moving average, there we see some buying traction and the pullback starts. So I am of the view that we are very close to the extreme support levels, and those who are like have a view of investing with a medium to long term view, or also with a very short term view, they should look for adding position or taking contra bets at current levels and more on dips.
Hmm.
Right. Shrikant, Yatin also joining the conversation. You look at the sectors also. Yesterday with Ultratech's entry in the wire and cable business, all of the stocks panicked. We saw a 10-15% kind of a correction. If you look at IT from December highs, we are down almost 20%. be it any other sector, there is a probable value trap everywhere. Pharma stocks also have been witnessing some bit of selling pressure. So it is not that IT and pharma as defensive have done well. Rather, FMCG stocks have also seen some bit of selling. So where is the place to hide? What are the sectors? What are the stocks that you think should do well or probably have some better margin of safety at this point in time?
Yeah, Yatin. I think, see, till the US market is doing well in terms of its economy data, I mean to say in terms of data related to GDP or uh, job openings and jobless claims and all. Uh, if we consider that, then one thing is very clear that they are not going to cut the rate so easily in the near term. So that impacts to the IT companies, and that's why today we saw again one more dip in the IT companies. Also, if we go through with the overall the positioning of tariff on the sectors, I'm of the view that auto as well as pharma sector are going to remain under pressure. And in such type of scenario, we need to focus on those particular sectors where there are like specific positive developments from the on the domestic side. So on that front, we like NBFCs specifically, not even private banks. NBFCs should do well from here, and we like stocks like Shriram Finance, Bajaj Finance. So, and if you go through with all these stocks, then they are doing really well in terms of their price performance. So NBFCs is the place to look for investing at current levels. Also, we like metals, commodities. Also, most of the time, I have seen that whenever there is this particular fear of tariff on China and other countries, we see a specific outperformance in metals. Last time, also between 2014 to 2019, when there was this particular fear was there, we saw substantial gains in IT in metal companies. So metals should do well in that specifically. Steel stocks and aluminum stocks performs better than other, I can say, stocks in the same basket. And finally, I think we need to focus on a few hospitals because there also the trend is like uh, quite relatively better as compared to other sector in the basket. So hospitals from the pharma basket we like, and we like commodities, we like MBFs.
Sure. There's another question I want to ask you about the market. Since February 17th, both the Nifty and the India VIX index are falling. Moving in the same direction, so to say. Technically, it should be the reverse. Why is this happening? If you could throw some light on that.
See, India VIX, I mean to say the volatility index is depends most of the times on the events and specifically events related to the uh, on related to domestic levels. So if we consider the news flow in the near term or at least in next let's say next 1 or 2 months of time, there is hardly any major news flow which is going to impact our market. And maybe that's the reason, or even globally also, if we see there is no at such any major event which is going to impact. So ahead of that event, most of the time what we see specific buying interest in traders, and they buys out of money call options or put options, and that's the reason we start seeing expansion in the VIX index. But at present there are hardly any major event which is going to impact directly, and maybe because of that reason we are not seeing any activity on the VIX side, but index is falling, and it is because of the specific selling from FI. So they are just selling consistently because the dollar index is still at 107. The 10-year bond yield is still at 4.5, 4.30 levels.
Hmm. Shrikant, obviously, when we talk about the support levels, everybody was expecting that 22,800 will be a major support zone. I think several times we had the Nifty which took support at 22,800, and now we are much below that level. For the intermediate term, as you were mentioning in your opening comments, that there could be some support here, since there is a correction which has happened from the key day moving averages. In general, when it comes to bounce back, would you probably see a better bounce back in large cap stocks? My question really is on how one investor should, look at the markets. Do you think now investments in large caps would be much better in terms of risk reward versus the mid caps, or or you think mid caps which have corrected 30-40% also will provide some bit of bounce back if it was to happen in the next 1 or 2 weeks?
Yeah, see, like whenever bounce back comes, specifically it comes in large cap companies, and then only we see specific performance in the index. Otherwise, we cannot call it as a bounce back. And this time the market is down nearly 15% from its high. Uh, and it is completely oversold. Even the index is down 15%. Stocks are down more than 30 to 40%, large cap companies, and mid cap companies are down nearly 50 to 55%. So I am of the view that in case the markets approaching to the given levels or even at current levels, if we see any specific development uh, on, let's say, on domestic front or global front, positive development, and in that, if the bounce back starts, then that bounce back will be much, much sharper than the current fall. I mean to say in just 4 or 5 weeks of time, we may even see the levels of 24,500 where the 200-day simple moving average is placed. So up to those levels, we can expect that bounce back. And if that bounce back is going to come, then we need to focus more on large cap companies, especially stocks like Reliance Industries,
Right.
where there is a risk of 5%, but the upside is 20, or even HDFC Bank or ICICI Bank, or
Right.
maybe from the metal space, we can take few stocks. So this is how like we can look for adding large cap companies at these levels.
Hmm.
Srikanth, what about Tata Motors? I think the stock, saw its worst monthly streak in losing streak in over a decade. The stock, of course, hit a fresh 52-week low as well. There's been intense selling pressure, where some of the brokerages, however, have turned positive, saying that all the bad news surrounding tariffs, etc., weakness in passenger vehicles may already be in the price. But technically, do you think the stock is extremely oversold? And would you expect the stock to take a U-turn from here? Is it a good opportunity, Tata Motors, risk reward wise?
So to be very honest with you, I was not expecting stock to fall like this and to these levels. I was in fact of the view that close to 750, 700 levels, the stock has completed its correction and now the stock can rebound, but it failed. It is falling. And now the way it has broken all its important level, the next level to watch out for would be somewhere close to, I can say 550 or 600 levels. 600, I would say it is very close to that level. But in case if there is any further more weakness, then the stock can even fall to 550 levels. Broadly, I am of the view that if there is a medium to long term view, then certainly we should look for adding stock even at current levels. But if there is a very short term view, then it is better to stay away from taking any short term position in the stock, because it takes time. It consolidate a lot when it falls to the bottom levels.
Hmm.
So at around bottom levels, it
Right.
consumes, it spends a lot of time and then only it reverse back. So it is better to stay away from taking any short term view.
All right. And I know you have to go, but one last question then on BSC. The stock slumped 10%. And, in the recent past, we saw the stock trying to make a comeback.
Hmm.
But with today's down move and the recent sell off, what's your view on this particular
In
stock?
fact, Nandita,
Hmm.
you're talking about BSC,
Hmm.
but I think Shrikant, we would also like to ask, because a lot of investors have bought CDSL, Angel One, Motilal Oswal, from brokerages to exchanges, even for that matter, IEX and MCX. All of these capital market related stocks are down 30-40%. So obviously on BSC, and then what do you really make of these capital market stocks which have corrected a big 30, 40, 50%?
Yeah. See, like Yati, if we see the relative performance of BSC as compared to other capital market related stock, then it was doing much better. Now it has started correcting from the highs, and it is correcting vertically. So if we consider the technical pattern of the stock, then it should retest, or retest is not the right word. It should again fall back to the levels of 200 days simple moving average, which is close to 3,700 or maybe 4,000 sort of levels. So yes, there is a possibility that we could see the levels of 3,700 in the near term. And most of the stocks have fallen to, in fact, they are trading below the 200 days simple moving average. So this stock can also like fall to the same levels. That is what I can see on the chart. And in case if there is any pullback because of any reason, then we should look for reducing long exposure from the stock. 5,000 was acting as
Mm.
major support for the stock. Now that is going to act as major resistance. So in case if there is any pullback because of any reason, look for reducing some positions and try to again re-enter into the stock somewhere close to 37, 38 and dead levels. For other stocks, uh, I am of the view that there also we are going to see some more sell-off if the market continues to fall from here. Uh, and
Mm.
in next, let's say, 2 3 days of time, if we are going to see the levels of 21,800, then all these high beta stocks are going to correct. That's the view. But yes, if there is a medium to long term view,
Yeah,
then we should look for adding stocks like HDFC, AMC, or Nippon India. Sort of stocks we should look
true.
for adding at current levels and more on tips.
All right, that's the view then. With that, Shrikant, would like to thank you for taking out time and joining us this afternoon and sharing your thoughts. Always a pleasure, and I look forward to interacting again next time. And I hope next time the color red is not dominating the screen, because I remember last time we had a chat on Valentine's Day, and that day itself we were deep in the red. So yes, the love affair with red has not ended yet, but I hope next time we chit chat with you, it would have ended by then. Thanks a lot for joining in.
Absolutely. Yeah, yeah. Next few days only, we have to see this color. That's the
Hope
thing.
so. We are
Hopefully.
keeping our fingers crossed.
Yeah. Sure.
Thank you.
Thank you.
Well then, Yatin, yeah, thanks. It just want to point out it was the
Hmm.
worst weekly fall for the market for
Yes.
2025. In fact, if you look at the entire 2 months, market has given negative returns in 6 out of 8 weeks of
Yes.
2025. So yes, 2025 hasn't really started on a very sanguine note for the market. All the sectoral indices posted losses this week, down 1 to 10%, and as I mentioned, the Nifty IT pack ended with cuts of 8% for the entire week. And if you look
Hmm.
at the notable losers for the week on a weekly basis, Tech Mahindra, Wipro, Ultratech as well, of course, disrupting the cable and wires segment. Tata Motors, HCL Tech, these were the top laggards. But yes, ending the week on a very, very subdued,
True.
dismal note, weak note. Everybody says that March is a month of hope, but we started March series on the back foot, so to say. But let's hope that once we come back on
True.
Monday, there could be some bit of green on the screen, and we could see some bit of a rebound from these levels. But with that, come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and of course, come back and join us on Monday morning with the markets. Thank you.